Stocks, often referred to as equities, represent ownership shares in a corporation. In the realm of finance, they serve as one of the primary instruments for investment, enabling individuals and institutions to buy and sell ownership stakes in publicly traded companies. Understanding what stocks are entails delving into their nature, characteristics, types, market dynamics, and their role in the global economy. Nature of stocks. Stocks embody a fundamental principle of capitalism: ownership. When an individual buys shares of a company's stock, they essentially become a partial owner of that company. This ownership typically grants certain rights, such as voting rights in corporate decisions, usually proportional to the number of shares owned, and the entitlement to a portion of the company's profits in the form of dividends, if declared. Characteristics of stocks. Ownership. Each share of stock represents a claim on a portion of the company's assets and earnings. Risk and return. Investing in stocks carries inherent risk. Stock prices fluctuate based on various factors such as company performance, market conditions, and economic trends. However, historically, stocks have offered higher returns compared to other asset classes over the long term. Liquidity. Stocks are considered liquid assets as they can be easily bought and sold on stock exchanges. The liquidity of a stock often depends on the trading volume and market demand. Dividends. Some companies distribute a portion of their profits to shareholders in the form of dividends. However, not all stocks pay dividends, and the decision to do so rests with the company's board of directors. Capital appreciation. Investors can profit from stocks through capital appreciation, the increase in the stock's price over time. This allows investors to sell their shares at a higher price than what they initially paid. Types of stocks. Common stocks. These are the most prevalent type of stocks. Owners of common stock have voting rights in corporate decisions and may receive dividends if the company declares them. Common stockholders are typically last in line to receive assets in the event of bankruptcy, behind creditors and preferred shareholders. Preferred stocks. Preferred stocks come with a fixed dividend rate and priority over common stockholders in receiving dividends and assets in the event of liquidation. However, they usually lack voting rights. Blue chip stocks. Blue chip stocks are shares of well-established, financially stable companies with a history of reliable performance. They are often considered safe investments, although they may offer lower growth potential compared to smaller companies. Growth stocks. Growth stocks belong to companies that are expected to grow at an above-average rate compared to other firms in the market. These companies typically reinvest most of their profits into expansion rather than paying dividends. Value stocks. Value stocks are shares of companies that are trading at a lower price relative to their fundamentals, such as earnings, dividends, and sales. Investors in value stocks aim to capitalize on the market's undervaluation of these companies. Cyclical and defensive stocks. Cyclical stocks are highly sensitive to economic cycles, experiencing fluctuations in line with economic trends. Defensive stocks, on the other hand, tend to perform well regardless of economic conditions due to the essential nature of their products or services. Market dynamics. Stocks are traded on stock exchanges, which serve as platforms for buying and selling securities. The two primary types of stock exchanges are primary market. In the primary market, companies issue new shares of stock through initial public offerings, IPOs, or subsequent offerings. Investors purchase these shares directly from the issuing company, providing capital for the company's operations and growth. Secondary market. The secondary market, often referred to as the stock market, is where existing shares of stock are bought and sold among investors. Stock exchanges, such as the New York Stock Exchange, NYSE, and the Nasdaq, facilitate trading in the secondary market. Stock prices in the secondary market are determined by supply and demand dynamics. Factors influencing stock prices include company performance, quarterly earnings reports, revenue growth, and other financial metrics can significantly impact a company's stock price. Market sentiment, investor perception of a company's prospects, industry trends, and broader economic conditions can influence stock prices. Regulatory environment, changes in regulations affecting specific industries or the overall market can affect stock prices. Global events, geopolitical tensions, natural disasters, and other significant events can have ripple effects on stock markets worldwide. Role in the economy. Stocks play a crucial role in the economy by facilitating capital formation, wealth creation, and corporate governance. Capital formation. Companies raise capital by issuing stocks in the primary market, which they can then invest in expanding their operations, developing new products, or pursuing strategic initiatives. This capital allocation fuels economic growth and innovation. Wealth creation. Investing in stocks provides individuals with an opportunity to grow their wealth over time through capital appreciation and dividends. Stock ownership allows individuals to participate in the success of businesses and benefit from their growth. Corporate governance. Shareholders, particularly institutional investors, exert influence over corporate decision-making through voting rights and engagement with company management. This oversight helps ensure that companies operate in the best interests of shareholders and stakeholders. Conclusion. Stocks represent ownership stakes in corporations and serve as one of the primary instruments for investment in the global financial markets. Understanding what stocks are involves recognizing their nature, characteristics, types, market dynamics, and their role in the economy. Despite the risks associated with investing in stocks, they offer the potential for significant returns and play a vital role in fostering economic growth and wealth creation. As such, stocks continue to be a cornerstone of modern finance, attracting investors seeking to participate in the ownership and success of businesses around the world.